When we've been speaking about the Indian economy in the last 1 year, it's mostly not been great news. That's why it pleases me greatly to talk about the economy this evening. GDP numbers have been put out. The forecast for the third quarter of 2021 financial year, that's from October to December, are at 0.4% in the positive territory. Now, by itself, this may not look like a great figure, but the fact is that we're officially out of a recession. In the first 2 quarters, the economy contracted first by minus 24% and then by minus 7.3%. We're now actually in the black. So after 6 months of contraction, this expansion gives us a huge sigh of relief. It also points out to a steady recovery. What has also happened though is that the forecast for the full year is gone to minus 8% from minus 7.7%. So how do we break down the GDP numbers that have come today? What does it tell us about the pace of recovery in the economy? To speak on this, I'm joined now by two top economists, M. Govinda Rao and DK Joshi. Welcome to both of you and great to have you on the show. Mr. Rao, let me begin with your take. Now, the government so far has been saying that we're in a V-shaped recovery, and that is the pattern that they see. Does the number coming out for GDP in Q3 bear that out?
Well, there is certainly recovery going on, and I think we have all been expecting that there will be recovery. Whether it is a V-shaped or a B-shaped, we don't know. Because see, all the alphabets have been used to describe the growth. But there has been a recovery, and if you see, the country has come out of the recession with the 0.4% growth, and you know, except for 3 sectors, namely mining, trade, and mining, trade, hotels and communications, and public administration. These are the only 3 sectors with the negative growth rate. And all other sectors in Q3 are in the positive growth territory. And there has been a significant improvement in construction, for example, from minus 7.2% in Q2 to 6.2% in Q3. And that's an important development if that has actually happened. Because construction is a labor-intensive industry, labor-intensive sector, and then obviously the employment also should show a commensurate improvement. Similarly, financial and real estate was minus 9.5% in Q2, and it has become 6.6%. So you have agriculture in positive territory anyway. You have industry, that means all the subsectors in industry, they show an average growth of something like 2% in this quarter. And obviously the services sector is negative, and that is a bit of a concern. But nevertheless, there has been a significant improvement. Of course, the market had expected the growth of something like 0.6%, but then 0.4% comes pretty close. And I think we should be happy with that. However, minus 8% growth for the whole year is a bit of a concern, but that also is not unexpected, because when they said minus 23.9% in the first quarter, you know, they had possibly not factored in all the impact of the lockdown on the informal or the unorganized sector of the economy. And when you take, as you go along, you get more data. And with this more data particularly from the informal sector, I think a more realistic estimate comes out. Many people had said at that time itself, including myself, that actual growth deceleration or the decline, contraction may be much more than 23.9%. So 8% growth decline, well, this is more or less on the expected lines. Now going further, we have to see how things work out.
Yeah. Mr. Joshi, your opening comments and also your take on this increase in the contraction forecast for the full year from minus 7.7 to 8%. Does it also give us an indication that we may face some roadblocks in the March quarter?
Yeah, I think if you impute the fourth quarter data from the annual minus the first 3 quarters, you get a funny, probably negative number in the fourth quarter. So I won't do it that way because, but I think right now things might change. I mean, just to put the things in context. I think the estimates for 21-22, 2021. First estimates came in January, second now are coming today, third one will come in the month of May. The advanced estimates are quite unreliable because they only cover not more than 2/3 of the year. I think what comes out in May will be more reliable and will have a shelf life of at least until next year. So I think, and data revision should not be seen as it's more of a norm than as an exception, particularly this year, given that there's so much of disruption. So having said that, I think there are two things that give a very positive signal. One is the construction pickup and the real estate pickup. I mean, real estate, because of, I think you have a combination of low interest rates, stamp duty reductions in some states, and also I think the dealer discounts, etc. So that has pushed the real estate segment, and construction is largely government led, because I think if you look at at least the central budget data from the central budget, I think there is a tilt towards these activities, and that's probably getting reflected in higher construction numbers. Manufacturing has also moved into a positive territory, and I think even in the next quarter it will remain positive. But the more worrying part is the services. I mean, particularly which Dr. Rao was also alluding to, the contact-based services. Now, if they don't pick up, and they're unlikely to pick up in a big way, because until the time you stamp out COVID-19, I think there's going to be some hesitation in consumption of these services. Now, they can have an adverse feedback loop back into manufacturing, because this is not a very small part of the economy. And I think if incomes remain depressed, I think their ability to consume consumer durables and other products will also get reduced. So I think so that is one worrying aspect, I think, where I think government will have to intervene directly. I mean, to help this sector out. It will not open up on its own, and I think as long as we have COVID-19 fully under check. And then I think also, I think encouraging is that the investments seem to have moved up. I mean, and this would again be largely in the third quarter, largely because of government investments, and the budget was also reflecting capex higher, I think. So that probably is getting reflected in these estimates of investment showing a pickup in the third quarter, which is encouraging.
I want to talk a bit about the factor of vaccinations and COVID-19. Mr. Rao, let me come to you with that question. All along, the big headwind to recovery has been a spike, unplanned and uncontrollable spike in COVID-19. We're beginning to see a small spike in numbers over the last couple of weeks, but it is also happening simultaneously with a wider vaccine rollout. How crucial will these two figures be? And is it safe to say that COVID-19 as a major risk factor has now receded?
Well, I do not think it has receded, because vaccination of such a large mass of population will take quite a considerable amount of time. It is not going to happen overnight. But if you see, I mean, even a sector like trade and, trade, hotels, which is basically, sort of a sector where social distancing is the norm, there has been an improvement. You see, from minus 15.3 to minus 7.7. is a substantial, substantial improvement. And that will continue to happen because people, so people now think, the numbers have come down. There is a little more of confidence on the, sort of the vaccine is on the horizon. Though it will take quite considerable amount of time for everyone to get, sort of vaccinated. But nevertheless, even then, I think that sector will continue to be, under severe stress. As Dr. Joshi said, I think the direct help to this particular sector is necessary. Both the travel and tourism, and then this thing, there will be a considerable amount of stress. offices are not fully functional. People don't go to the offices, and obviously, sort of official tours are not on. So I think the government will have to come in. I will not say that, just because the vacuum is in the horizon, the things have gone away. I think we still continue to be, we are still having the problems. But I think it will not be, before another almost a year before we really get to some sort of a normal situation.
Just last point from you, Mr. Joshi, and this is something that people often ask, that while the GDP numbers are reflective of an improvement, especially in sectors like construction, what about the informal economy and a large part of economic activity which is not necessarily captured in this data? Is your sense that there is a corresponding recovery there as well in the informal sector, or still a lot of pain?
Well, I think I would assume, by whatever anecdotal information we have and whatever assessment we have done by the firm size, I think what we find is the smaller the company, the bigger the hit. I think whether it is the top line or the bottom line, because they have low bargaining power, I think and they are more stressed. I mean, right now, I think what we are seeing as results is the larger companies which are doing quite well. So I think extending that, I think it's logical to conclude that the dichotomy between the formal and the informal sector has actually widened, I mean, because of the pandemic. And I think just as the dichotomies have appeared in various segments like rural versus urban, I mean, you can cut it out in various ways. One of the reasons I think is that the service sector which we were talking about, which has been hit more, I think it's more prevalent in the urban areas. I mean, and I think so that is why urban economy has been hit much more. More than 2/3 of the services are in the urban area. So I think the rural has been reasonably protected. So if I were to look at the informal part of urban versus rural, I would say the informal part in the urban economy has been hit much more than the rural economy. So that's even within the informal segment, I think you will have dichotomies in rural. So I would say that it has been hit harder, and as we go along, I think as we get more information on the informal segment, how it has been impacted, I think the revisions will take place in GDP, and so there should not be a surprise, I would say, particularly not this year.
Okay. Well, for now, it is good news. For this evening, there is good news, and definitely India in the black, out of a recession officially after 6 months of pain. Hopefully, we will see a sustained recovery. Thank you so much to both of you for joining us on the show today.
Thank you. Thank you very much.